Kunal, hi, good morning. While we're still very much in the range, we have slipped sub 24K. How crucial is that?
Yeah, that's a crucial point for the markets because breaking that 24,000 mark is this is the fifth attempt in this last 26, 27 days, 28 days broadly consolidation for the index that we've broken below that 24,000 mark. But the major of support, of course, for the markets is 23,800, which has been a major support for the last, I think, 1.5 or 2 months approximately now for the index. From the point we've managed to break above those 23,800 levels. Now, what happened yesterday was, the last 2 days specifically, there has been a slight jump in the open interest for the index, both in terms of the rollovers, which is the next month futures, that's the August futures, as well as for the current futures. So that tells you that there's been some anticipatory short which has been built up into the index futures, specifically on the Nifty. That probably indicates that maybe the markets are going in with slight bit of heaviness at the higher levels. The second part which you look out for, and today specifically for that, is there's a huge amount of built up by the 24,000 put strike. You almost had 1,87,000 contracts on the 24,000 put. So which means that my sense is that we may not open at that 110, 120 points what the Gift Nifty is showing. Maybe I think we could be in for some bit of a softer opening, but there could be a chance of a slight bit of recovery. The third, the most interesting point is that in the last many weeks of the market, whenever the markets have gone through a correction, when the advanced decline ratio has been skewed towards 1:3, 1:4 in favor of declines, the next subsequent day for the markets generally is a mild bit of a bounce back. So when we look at all of these data points, it indicates that maybe I think today could be a day where the markets may open on a little bit of a softer note, but there could be a scope of a recovery maybe in the second half.
But what could lead that recovery, Kunal? Because both banks and IT are under pressure of late, the largest weighted sectors.
Yeah, broadly the sector tilt is still on the negative side, but there are other spaces like, for example, realty has done really well for itself. You have names from the
Select autos are doing very well.
auto stocks, in fact, have recovered very smartly. The infra pocket as such, ABB, Siemens, etc., they have looked very strong for themselves. So there are those odd pockets which have done very well for themselves. I would sense that markets would probably just try and play a counterbalance over here, try to just about protect this 24,000 mark, hopefully by going into the weekly as well as on the monthly options.
Kunal, if you look at the options chart, the next big support which comes in is at 23,500 for the market. Do you think that, and there isn't much of a, momentum of put writing which is happening to push the market above, because yesterday we also saw unwinding of puts happening at higher strikes which is there. Do you think that the market are now drifting towards 23,500 and maybe at the upper hand 25,200 maybe the immediate resistance?
So absolutely yes, Sajid. What happens is the put call ratio we look at. That's a best barometer to look at whether the markets are into a neutral phase, bullish or a bearish phase. Now we were at 1.6 when we started off, or we ended the previous week on the put call ratio. That tells you that the markets were a little bit more on the heavy side on the put call ratio. And from those 1.6 on the put call ratio, where the Nifty was at 24,300, we drifted lower towards 24,000 mark. Yesterday, when we managed to close at those 24,000 levels or slightly below, the put call ratio drifted to 0.7. So which means that the markets, when it falls below 1, we expect the markets to be a little bit on the softer side, on the negative side. But 0.6 becomes a very strong threshold support for the put call ratio. So which means we are closer to the oversold territory for the index on the very short term charts. And that's why I don't see an immediate pressure coming on the indices. Generally what happens is when the markets come off a range or a consolidation, it generally happens at the start of a fresh series. And we see this for individual stocks also. When these stocks go into a 2-3 months of correction, a new trend starts off once the expiry begins or a fresh expiry begins. So I think in all the construct, it looks like that maybe over the next couple of days, the market should just drift into or continue to drift into this 400-500 point range.
So how should one play stocks, Kunal?
So I'll go with one buy and one sell over here. PI Industries apparently is one of the charts which is looking extremely attractive on a risk-reward basis. The stock had been beaten down significantly. We saw a low of 2,600 being made for the stock in the recent charts. So it looks like a strong contra buy at the current levels. Would look at a target of 27.55. Stop loss could be kept at 26.50. The second could be a sell on BSE. The stock continues to be weaker on the charts from that highs of 4,300 plus. The stock made a month and a half out back. It's been consistently making a pattern of lower highs and lower lows. Looks like that the stock could probably try and retest the previous lows, swing lows on the short-term charts. So would look at a sell with a target of 35.78, stop loss at 36.58.
How do you look at DRL? Dr. Reddy's numbers were weak, but from a charts point of view, how is it looking?
See, it's one of the most weakest chart in the entire pharma basket. So pharma apparently is the third or the fourth sector on a relative strength scale basis, which has done reasonably well for the July series. You look at the pharma index from 21,700 thereabouts, we moved toward 26,000 mark in the last 2-3 months. But then in the last 2-3 months, Dr. Reddy's been one of the stock which has been actually weak on the chart. So it's going into the results on a much more weaker note. I'm not sure of the results, but my sense is that maybe the stock could probably just about try to be an underperformer in the near term.